Hello everyone, today is Friday, July 17th, 2020. My name is Evan and welcome back to another market recap video. If you're new here, we break these videos up into two parts. First part, we're going to talk about everything that went on this week in markets. So we're going to look at just general performance to market internals, individual sectors, volatility, and really try and pick apart anything that stands out or seems a little bit unusual. And then in part two, we're going to jump into the charts, put everything into context, look at some longer term trends, and try and make sense of where we are in the bigger cycle. So with that said, let's jump into this week's episode. And before we do kick things off, I do want to give a quick plug here to a new video series that we just released yesterday called Beyond the Charts. And this is a new series where we basically are asking questions about the stock market, and we are coding up a strategy or running some back tests or getting our hands on the data to actually get the answers to these questions. And we've got some cool episodes lined up with some interesting things. Of course, certainly be interested in feedback and topics that you guys are interested in, and especially if you are interested in learning how to code or how to take a more quantitative approach to trading. I hope this series will help answer some of those questions, maybe bridge some of those gaps. So it's a long first episode. It's almost 40 minutes. Hopefully you could maybe carve out some time during the weekend to dive in. It's a little bit dense, and I'm going to try and probably keep it around 30 minutes on future episodes, but hopefully you guys enjoy, and always happy to hear feedback and comments on that. You can find it on our YouTube channel, or if you want to just cut right to the blog post, a little bit shorter version, we have a blog post of the first episode on thetraderisk.com. So, a couple of the happenings from this week. Earnings season, it is here, and we are getting results and earnings announcements, financials reporting first, and so far they are mostly holding the line in terms of market reaction. Technology stocks notably did take a breather this week. We did have Netflix on Friday or Thursday afternoon, and the market was a bit disappointed there. We'll talk about that in a little bit. And the VIX near the lows of this recovery. So kind of a mixed set of headlines here, but the market really seemed to be playing some rotation this week. Again, we'll talk about that more in the second half of this video. So if we jump into just the raw performance here, you can see on the week, if we're looking at the right-hand column, it was a mixed picture with the S&P 500 positive by a little over 1%, the NASDAQ down almost 2%, the Russell up 3.5%, and ACWX, which is international stocks or world stocks minus the US, was up about 1%. And this really isn't a picture we've seen here in some time, where we actually have the NASDAQ underperforming in red. Looks a little unusual, seems a little scary. We'll see if this is a new trend or just a brief, again, sort of game of rotation. If we get into market internals, everything improved this week. So despite tech taking a breather, we saw almost double the amount of new highs this week versus last week. We saw the number of advancers this week, 2270 in aggregate here, pretty firm number. And if we're looking at the percentage of stocks above a 20 SMA, you can see getting a little bit heated in the short term, but probably still has room to the upside, almost 82% in the S&P 500. So if we go into sector performance this week and we take a look at really the top three, bottom three, if we start with the top three, we got industrials leading the charge, which again is something that's new and a little bit different, followed by materials and healthcare. All of those sectors for the week were up over 5%. So some very big moves there in some sectors that haven't been so hot or really haven't made it to the top of the relative strength list in quite some time. And then in the bottom here, we have technology in last spot. So the XLK down a little over 1%, followed by communication services and real estate. 2 of 3 of those were in the red, real estate eking out just a slight positive return over the past week of trading. Now, VIX here, we talked about at the top. We did see the VIX continue to fall or come down. 2570 this week is how we closed on Friday for the VIX. That is nearing the lows from this recovery. In other words, since the recovery started in, call it March, we're basically seeing VIX at its lowest levels right now. You can see, generally speaking, the front month and the third month down, but notice here the 6-month and the 1-year VIX actually climbed this week, which I thought was pretty interesting. I really don't have too many answers or conclusions on this, so if anybody else has some thoughts here on the later end or the second half of this term structure here, I can double check obviously the data feeds too to make sure we didn't have any issues there, but we did see a little bit of a rise in both of those, and I think that's a little bit interesting. So if anybody has thoughts there, I'd be happy to hear them. Credit markets this week, LQD, JNK, those are our ETF proxies for investment grade and high yield, both up strong, 1 to 1.5%. So it was a good week for credit. No signs of disturbance from this market. And if we look at interest rates and commodities, yields were generally speaking lower across the board. So that basically means we had bond prices higher, and we also had commodities continuing to rally, particularly silver here, which was up 3%, over 3% this week. It's up almost 10% this month. So it's having a not this month, but a 1 month look back. So it's having a pretty good stretch of performance here, and it's continuing. And that really shouldn't be too much of a surprise, because if you've been following our trend models and our analysis here, silver for the past month and a half or so has been in bullish trend. So report card for this week. It was a mostly positive week here. We had two issues. We still have an X here on the volatility environment. A VIX, even though it is at one of the lowest levels we've seen in the past 3 months, it's still historically pretty elevated. So the volatility environment's in the penalty box. And we actually did see we saw the defensive areas of the market really offsetting a little bit and outperforming some to the upside. So the report card for this week was a B on this week's rally. Good passing score, but could get some improvement. Last but not least, we look at our Merlin trading strategy, which is available for free trials on the Trade Risk website. You can see if you're following along kind of week over week, basically what we're seeing here is that our strategy did some buying this week, and it did put more cash to work. It still has a little over half, 56% of its cash, of its portfolio is in cash. So you could call that conservative or defensive, depending on how you want to label it. The introduction here too this week is we got some exposure to technology. So as technology takes a little breather and pulls back, starting to get some exposure there, small piece of the pie at this point. But that's basically the positioning of our trading strategy heading into next week. So that is it on part 1. We'll be back in just a moment with some charts. All right, we're back here. We've got WORDEN TC2000 open. We're looking at our equity market grid, and we are looking at a weekly time frame with our smart trend filters applied. That is a custom indicator of ours. We'll link it up in the top right now if you want to learn more about how it works. You can click that link, but essentially it is the colored dots there which easily displays trend and trend strength. And price is the whited dashed lines on this grid. So if we look here at the top left here, the S&P 500 chart, basically on this weekly time frame, you can see there's been no change to the outlook here. We've had a bullish trend reading for the S&P 500 for almost 2 months now, and you can see price continues to hold up and advance to the upside. We put up a 1.25% month. We're getting back over this pivot here from early June, which had marked the highs for this rally for some time. We're starting to challenge that and get above those prices right now. Otherwise, no other changes here on the weekly time frame. NASDAQ in the top right, again, you can see down to almost 2% this week. But, if we look at where price is relative to where our trend filter is, there's no change or no technical damage or transition to speak of. This is still very much a bullish trend, and so the way I sort of look at this and view the market, and so does our investment strategy, so does Merlin, our investment strategy, is that we're looking to almost accumulate exposure here as prices pull back. That would be the way I would view this as this comes back down to earth, as some of these high momentum extended stocks start to reset themselves a little bit. That's what I'd be looking for in terms of opportunity. Of course, there's no guarantees with that. It could mark a serious top that lasts multiple months or years, right? So we obviously don't know at this point if this is just going to be a short-term pullback or a major pullback, but I'm going to let the data, kind of support the decision to want to be basically a buyer of pullbacks in these strong trends. If I look in the bottom left here, you can see Russell 2000 still, again, 3.5% to the upside. It's been bullish trend here for multiple weeks, no changes. And same thing with ACWX taking out its prior highs in the bottom right. Bullish trend there, nothing has changed. Now, if we go down to a daily chart, we did get some different signaling going on here. So in the S&P 500, nothing changed. This has been bullish on the daily chart, still remains. Top right, NASDAQ, still bullish on the daily chart despite the pullbacks. Bottom left, though, is where you're getting that transition up. So the Russell 2000, which has basically been in no man's land here for the past month, a little over a month, basically transitioning and oscillating between yellow and a little brief stint here on the bear signal, is moving back up into bullish signaling here. So the Russell 2000, with the advance it saw this week, is back to bullish trend on the daily chart. That's a new signal and some potential new opportunity here in the Russell 2000. Bottom right is ACWX. Again, no change here, still bullish. So if we now look at some of the price action, let's get down to specifics here on some of these charts. With the S&P 500, this has been our view that we've been looking at. This is the roadmap. These levels haven't changed. And basically this 3130 to 3140 zone, that's been the battleground. That's been the inflection point for this market here for some time. And we continue to remain above it. And in fact, our takeaways really from last week, when we did our weekly recap video from the 10th, you can watch that video again. It's obviously all the old videos are on YouTube. But one of the takeaways here is that the S&P 500, despite this volatility that we were going through in this zone in here, our takeaway was it held where it needed to. The S&P 500 held this zone, and basically the bulls, still remained with the benefit of the doubt with this recent breakout. When we did our midweek video on the 14th, so Tuesday of this week, we did a midweek video on let's see, it was on this Tuesday here. Basically, our takeaway once again was that, look, things were pretty rattled here on Monday, and we had this big outside reversal in the market, but there was hardly any technical damage, especially looking at the indices, after this outside reversal. So basically we had that rough, again, day to take notice, session to take notice of. Red to green in a violent sort of way is always something, and high volume is something we always want to pay attention to. But when it comes down to it, the structure of the market didn't change on Tuesday. We essentially reset some of the froth, and we rejected some breakouts, but we didn't go on to break trends or violate longer term support. So once again, we sort of held where we needed to. There was no follow through to this reversal day on Monday of this week. And so basically, again, this 3130 to 3140 held. The market popped higher, and you can see we're now consolidating up here pretty high and tight, just at the old June highs here around 32.33. So the market looks healthy in terms of S&P 500 structure. Trends are higher, price action is supportive, and basically the same levels and areas we talked about even last week. This open gap here from early February or late February of this year really seems to be the next sort of target area to the upside. I would expect, again, as long as we can hold up here, I would expect that we would get back up here and fill this gap, this uptrend to continue, and life to look good here for the bull case. Now, of course, we do have earnings season amongst us, or that we're traveling through right now. So there are potentials on the horizon, of course, for that narrative, that outlook to be derailed. So if we get more reports like Netflix, like we saw on Netflix today on Friday's session, down 6.5%. If we start to get a lot more of those reactions, then of course that's going to put a damper here on some of this constructive price action. And when it comes to earnings this quarter, to give a quick note, and I'll try to stay in my lane here because I don't spend a lot of time looking at really the fundamentals of companies, but I think it's almost taking for granted here that we're going to see some pretty horrible numbers. I don't think anyone is expecting necessarily that these companies are going to be reporting anything but lousy numbers. The year-over-year numbers should be, and comps are going to be down pretty considerably on a percentage basis. And so the headline numbers are going to obviously come at us, and they're going to look pretty scary. The question is, has the market priced in that result, right? Has the market already kind of factored in the fact that these numbers are going to be lousy? And I think a lot of it's obviously going to depend on company outlook and how quickly they are, thinking that they're going to be off to the races again, pre-COVID-19 type of thing. So I think those are the interesting, threads that we'll want to start to pay attention to as we get more companies coming through earnings. Of course, primarily here, I'm just going to be looking at price and price action, and leave all of the analysis on that other side to the experts. So for the S&P 500, bullish trend, bullish price action here. Life looks pretty good. If I look at the Russell 2000, again, we talked about our trend filter moving back up into a bullish signaling state this week. We got a price action breakout over 144, which has been our level that we've been sort of waiting for or keying off of, saying that we really want to see the Russell back over 144 to 145 to regain some momentum and authority, and it's doing that. It's doing that so far. Again, of course, if that changes next week, if we see some type of high volume breakdown and loss of 145, then my opinion here changes. But I think right now I would expect that the Russell, if it continues to hold here, gets back up and retests the old June highs up around 153. NASDAQ 100, this is where we're getting some turbulence here, but again, you can see it's still pretty much holding fairly uninterrupted in this trend that it's been in. Still have bullish support all around, 250 or so. Again, I think we talked about in our last weekly recap here that some rotation out of tech and even a reset into the 240s would be just welcomed at this point, would still be considered very healthy price action. And it does actually seem like it may want to do that in the coming weeks, especially if we do see some more earnings like Netflix. We may get a little bit of a reset here in the Qs, the Russell 2000, the S&P, the Dow may pick up some of that slack, and there we have some nice healthy rotation in this uptrend, in this recovery. So we'll see if that's the way this plays out. Of course, if Qs happen to be, the real linchpin here, and if they start to go down and things get much uglier and there's not enough rotation and there's not enough support in other areas of the market, then things could get ugly. So that's what makes a market and what keeps us, doing our analysis every week. We'll take it one day at a time, but so far everything is still holding up here for the NASDAQ 100. So let's jump into some other markets now. If we look at our other board here, credit markets looking good. And for the first time, if we look at JNK here on a weekly time frame, we've got our first buy signal in junk bonds. We had a brief flash of strength here at the end of February, but really it's been, January of this year and even earlier since we've seen constructive trending bullish action here for JNK. So, Be interesting to see if this can continue to hold. For now, we did get that turn up there, and that looks pretty constructive. If we look in the bottom left here, VIX continues to be in a sell signal. Remember last week it got a sell signal on the weekly time frame. That's basically persisting here. And if we go down to a daily chart now, we also got a sell signal for the VIX yesterday on Thursday. Back to bearish trend. You can see VIX is so far continuing to roll over, maybe a bit extended lower in its move, but we'll see what Monday brings. TLT in the bottom right, bullish trend there on the weekly and daily time frames. If we look at commodities now, top left, we got gold, we got silver in the top right. Both of those continuing their uptrends. Nothing has changed there. Bottom right is commodities, flashing or continuing its second week of a bullish signal here for DBC. And oil is still negative here on the weekly chart. Daily chart, everything is bullish here. Gold, silver, DBC, and USO, all bullish trend on the daily chart. Now, if we finalize it with some sector views here, a couple of standouts I want to talk about: consumer staples, industrials, and real estate. So let's jump into those signals specifically. If I look at XLP, remember we spent some time talking about XLP last week. We basically talked about the fact that this thing had been consolidating sideways for quite some time. Since April, it was one of the strongest recoveries off of the lows, and then it basically just went sideways and stagnant here for 3.5 months. I should know pretty acutely because I've been holding on to an XLP position throughout this entire consolidation. In fact, it owned it from somewhere around these levels, and basically have just been continuing to sit with it. Fortunately, it does pay a small dividend, so it's not the worst thing to continue to hold, but it does look like it wants to get going here to the upside, and it is starting to move and start to break out from some of this long consolidation here. We do have a profit target for it, a first initial profit target that it is getting close to. We'll see if we can get it next week, but XLP here going bullish trend on the daily chart with our smart trend filters and looking pretty constructive. Next up, if we look at XLI also moving to bullish trend here on our smart trend filters. You can see it had some price compression here over the past couple of weeks. We had it broken to the upside here. We've had a series of about 6 or 7 up days in a row for XLI. So support has held. We are starting to move back to the upside here, and it looks like it's in good position here to potentially get back up to those early June highs. Last but not least, or actually a few more, XLRE, so real estate, did move to bullish trend here just on the margins on Friday, but our smart trend filter picked it up here as a buy transition on the daily chart. You can see it's been having some price compression here, and we got that nice high volume move on Friday as well. You can see volume coming in almost 200%, 2x, 2.5%. 250%, that is, average daily volume. So you can see good volume coming in, starting to turn up, early signal there. But that's one thing that our indicator is picking up. And last but not least, if we just take a quick look at technology here again, XLK, the Spider ETF, you can see basically very similar to the NASDAQ 100, of course, not seeing a tremendous amount of damage, just seeing some volatility here. Again, resetting that froth a little bit and just moving sideways. So we'll see how that continues. So far, holding up in bullish trend right now. Personally hoping for more of a pullback in this area of the market, but we'll see what we get. So that is the full recap here for the week of the 17th. Don't forget, if you got some spare time this week, check out that new series Beyond the Charts, especially if you're interested in the quantitative side, learning how to code, or if you're just simply interested in our first episode's topic, which is trading the golden cross, or looking at the profitability of following golden crosses. That's what we tackle in our first episode. So that is it for me. Thanks as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have yourself a great weekend, and we'll see you back here next week.